Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, some key inflation data is out. Firstly, American consumer prices rose 2.5% in the year to April and 2.1% on the less food and energy basis. Although this was less than expected, neither were changes from the March rates and are high enough to keep markets believing the Federal Reserve will continue to gradually raise their benchmark interest rates. June and September are assumed by markets, and maybe one more. Recall the April non-farm dairy data reported wages rising 2.6% in the same period. And the US Treasury announced it will be selling more than $100 billion of new debt instruments next week. The pace of issuance needs to rise on the ballooning US federal deficits. As large as it isn't as large as the $179 billion auctioned in late February. Jumbo auctions are likely to become the norm there. We should also note that the US Treasury 10-year yield is now at 2.97%, and that compares with the New Zealand government bond 10-year yield of 2.79%. The New Zealand discount to the US is relatively new and partly reflects investor concerns over US debt levels, more than our attractiveness. Even more startling, the New Zealand yield might even be a discount to the Aussie equivalent. It was very briefly yesterday, but the Aussie 10-year is now at 2.78%. However, we have closed in on them quite quickly. China also released its price data, reporting CPI inflation in April that is lower than expected. It came at 1.8% rather than the expected 1.9% and the March 2.1%, so it's going down quite quickly. Going the other way, China's producer prices are rising again. They are up 3.4% in the year to April. This is the first year-on-year rise in 7 months. In the Australian budget, as we reported yesterday, cash payments of $10,000 or more are to be made illegal. Today we hear the Aussie government ministers are already considering lowering that threshold. Cash can never meet anti-money laundering regulations, so its time may in fact be nearly up. As we noted earlier, the US Treasury 10-year yield is now at 2.97%, down 3 basis points from this time yesterday. The Chinese 10-year is at 3.72%, that's unchanged, while the New Zealand equivalent is at 2.79%, also down 3 basis points. Gold is at $1,321 an ounce in New York today, up $9. And oil prices are up a little more today than yesterday, up to $71.50 a barrel in the US and over $77.50 a barrel on the Brent benchmark. Some analysts are saying the Brent price could reach $90 next year and over $100 the year after. Shrinking inventories are the culprit if the global economy keeps on expanding. The Kiwi dollar is slightly weaker against the greenback at 69.6 US cents. On the cross rates were noticeably lower at 92.4 Aussie cents and a 58.4 euro cents. That puts the TWI at 72.2. That is how the benchmark interest rate discount will play out. The variance will be felt in the exchange rate, and that will add to our inflation. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.